Thank you, Aziz. Thank you. Aziz, I go later carry your heart run. Now every time I come live, you dey always give me your heart. Okay, market structure is basically the way price moves on the chart. Market structure is basically the way price moves on the chart. Like example, this is market structure. Maybe the market is going highs, lows, higher high, higher low, higher high, higher low. This is basically the way price moves on the chart, and that is market structure. And these are market structure. We have uptrend, ranging, and downtrend. Guys, you can see this example here. This is uptrend, this is a ranging market, and this is a downtrend market. And guys, I talked about advanced market structure. This is an example of advanced market structure. There will be a liquidity sweep to the last low. There will be a liquidity sweep to the last low before a actual break of structure. That is how we come. That is an example of advanced market structure. This is how you were taught. This is how newbies were taught. But this is how the market actually moves. So guys, so you should understand that this is how newbies were taught. This is how the market actually moves. Okay, this is an example to the downtrend. This is an example, and this is also an example to the downside. Okay, this is a break of structure, which simply means markets keep breaking a key level and maintaining its trend. We have two ways markets move. Either we jump, and in market structure, when we see the market trending, we only have two ways: either to jump on the trend or to reverse the trend. Either to jump on the trend or to reverse the trend. And what I mean on jumping on the trend, like continuing the trend, is like when markets keep breaking key levels. When markets keep breaking key levels, this is what I mean about jumping on the trend. And what I meant about reversing the trend is when market is giving up, like when market is unable to go up anymore, then the market starts selling. That is what I mean about the reversal, which is also called market structure shift. And this is an example of market structure shift. You can see this was an uptrend. So the market was unable to create a new high. Then what did the market did? It broke this swing low right here. This confirmed our market structure shift. So immediately the candle closed below this swing low. It confirmed our market structure shift. And this is an example from an uptrend to a downtrend. This is an uptrend to a downtrend because the market was trending up until it was unable to give us a new high. Then it broke below this last low. So this is an example. And this is also an example of the downtrend. The market was currently on a downtrend. It was unable to break this structure right here. Then it broke above this high, which is our swing high. So that is market structure shift to the upside. This is an example, and this is a practical drawing example. I'm still going to teach you guys, show you guys on the chart. I taught this market structure yesterday, but this is just a recap. This is just a recap. So we basically have two ways in a trending market. Either we up on the trend or we reverse the trend. Either we up on the trend or we reverse the trend. So guys, let me give you an example of a break of structure. Guys, when markets keep breaking key level, look at this level now. The market break above, break above, break above, break above, break above. This is an example of uptrend. This is an example of uptrend when markets keep breaking key levels, keep breaking above. And this is an example of downtrend when markets keep breaking. Okay guys, look at this. This is an example of downtrend. The markets keep breaking key level to the downside. The market keep breaking key level to the downside. This is an example of downtrend, and this is an example of uptrend in one place. So this is an example of downtrend, and this is an example of uptrend. And about ranging, guys, if you can see this clearly, this is an example of a ranging market. This is an example of a ranging market. It was unable to break above and it was unable to break below. So that is an example of ranging market. That is an example of ranging market. Okay guys, let me show you an example of market structure shift. let me show you an example of market structure shift. Guys, look at this. The market was currently going up, it was currently going up, but this low was unable to create new high. Guys, look at it. This low was unable to create new high, then it actually break below this low. If you check, and this is 4 hour, if you can check the lower time frame, let's go on the lower time frame so I can give you an example. Let's go on the lower time frame. Okay guys, look at this lower time frame. This is our swing high, this is our swing low, this is our swing high here, this is our swing low, but the market was unable to break above this high. Because guys, look at this, the market was currently uptrend, it was giving us higher high, higher low, higher high, higher low, higher high, higher low. Then it was unable to give us another higher high, it was unable to give us another higher high. Then it break below, it break below. This is confirming our market structure shift. You know why? And some people might actually use here as their market structure shift. That is for people who jumped early into this market. But this is our swing low and this is our swing high. But when this market closed below, immediately it closed below. You can see this candle. Immediately it closed below this low. Then it's confirmed our market structure shift from the upside to the downside. Then guys, you can see what happened after the confirmed market trend change. After the market trend change, you can see it was going up, then it started coming down. And if the market, guys, you should know, if the market has been buying for so long, before the market starts reversing, there should always be a market structure shift. There would always be a market structure shift. So guys, do you understand that about market structure? Can I move to inducement now? And break of structure, for people that was not here yesterday, break of structure simply means a failed order block. Break of structure simply means a failed order block. Guys, look at this now. You can see this place. This was an order block right here. This was another block right here. This was another block right here. This should have made the market keep selling, but it was unable to sell. It was unable to sell. It was unable to hold the market. The price was unable to bounce back from this trend. So it break above, which is called break of structure, is a failed order block or a failed zone. That is actually the meaning of break of structure. Is a failed order block or a failed zone. You can see this zone failed to hold the market to keep selling. So when it break above, it confirmed our break of structure. So that is simply the meaning of break of structure. Guys, do you have any question about this market structure before I jump on inducement and liquidity? Guys, do you have any question about market structure? Please, one after the other. Please, one after the other. Please, I'm asking about market structure now. Do you have any question about market structure? Yes or no? Please, it is not about pair. I'm teaching market structure and it works for all pair, maybe indices, crypto. I'm talking about market structure. Please, one after the other. Do you have any question about market structure? Yes or no? So I can know if I should move on or not. Manny said yes. Manny, send request. If you have any question, send request. Teach us a strategy. I have to start. I'm teaching you my strategy, but I have to start from the beginning. If I don't teach you market structure, how will you know? Guys, one after the other, I beg. It dey too early this night. Please make sure you have a reasonable question about this. To confirm market structure must be a BOS on 4 hour. or daily? It depends on daily. And to confirm your market structure, it might be 15 minutes, 30 minutes, 45 minutes, 1 hour, 2 hour, 3 hour. It like anywhere, you can literally see your market structure anywhere. We have three ways the market move: either uptrend, downtrend, or ranging. So anytime you see anything in any minute, maybe 1 minute, zero, so anything you see, as far as you are seeing something like this, this is market structure. And this is ranging, this is uptrend, this is ranging, this is downtrend. As far as you are seeing something like this in the market, this is market structure. You don't even need any time frame for market structure. Una dey ask question o, you want to mark the market structure along with me for better understanding? I'm going to mark out the market structure for you because we don't have time to waste. Before you mark out your market structure, look for your swing high and your swing low. Because there is a lot of manipulation in the market. Look for your swing high and your swing low. For example, let's start from here. Okay, after this break of structure, you can see after this break of structure we have our pullback, which serve as our inducement. So when this market hits now, when it started buying from here, this is my swing low, and where is my swing high? Before this market started buying, this is my swing high right here. This is my swing high. So anything that happened between here and here, it is just minor structure. Anything that happened between this swing high and this swing low, it is just minor structure. Okay, let's go to this to the other one. After this break now, look at the last low in the market. This is the last low. And where is the last high? This is the last high right here. This is my swing high and this is my swing low. So anything that happened in between this swing high and swing low, it is just major structure. It is just minor structure. My swing high and my swing low, it is major structure. So anything that happened, it is just minor structure. So do you understand now? So for you that want to mark, I need to know how to identify that. Guys, one after the other, I'm going to talk about directional bias. I'm going to talk about one after the other. So do you understand this stuff? Do you understand this about market structure? Do you consider a week as a break of structure? Yes, I consider a week. No, I don't consider a week. But if it is breaking this week, I consider it. But if it was this week, for example, if you have something like this, this is not a break of structure. Let me delete this. Guys, look at this. This is not a break of structure. This is the actual break of structure. This candle. So I don't consider week as a break of structure. So do you understand? So do we place our buy after the break of structure? Please, no, don't rush. Let me go one after the other. You wan run place buy after confirming your market? Place am now. Na my account. So do you understand? Okay, guys, let's move to the next step. And okay, guys, let's move. This night I am teaching liquidity and inducement. What is my inducement? I use my inducement as my entry. This is my entry liquidity. I call the inducement as my entry liquidity. You know why? Because inducement is just a trap. There is difference between inducement and liquidity. Liquidity means money. Inducement is just a trap. Inducement is to trap traders, maybe to hunt their stop loss and all. That is inducement. Imagine if you have something like this. In the market, if you have something like this, when the market, after this break of structure, when the market retraced here, some people will actually buy, from this point. If you have something like this, and some people will buy from this point, from this point, from this point, but the market is actually going to come back down to hunt their stop loss. So that is why I call this my inducement. Inducement is just a trap. And let me give you types of, where's my test? Okay guys, let me list out my liquidity and my inducement. What is my liquidity? I have what is called Trendline liquidity. I have double top liquidity. I have double lows liquidity. And I have my long wick liquidity. And what is my inducement, guys? This is the four liquidity I have, and I will tell you what I use this liquidity for. So what is my inducement? Guys, this is the meaning of my inducement. And this is the meaning of my liquidity. Guys, this trend line, double top, double low, long wick liquidity, I use them as my take profit level. This trap, this inducement is what I use for my entry. This is for my TP. So guys, do you now know the meaning of the difference between liquidity and inducement? If you have something like this, this is my inducement. And guys, let me give you an example of trendline liquidity. If you are having highs, lows, higher high, higher low, higher high, higher low, higher high, higher low. You see, when the market was giving us these highs, lows, higher high, higher low, higher high, it is creating liquidity to this downside. So if this market actually hit a point of reversal, where will be my target? My trend line liquidity, which will be this last low. This is an example of a trend line liquidity, and I'm going to show you on my chart. This is an example of a trend line liquidity, and I'm going to show you on my chart. So let's go to USD JPY. This is an example of USD JPY. Okay, look at this now. The market has been giving us highs, lows, lower high, lower low, lower high, lower low, then lower high. When the market got here, it was unable to give us MSS to the downside, then break above. The moment this market break above is confirming uptrend. So any buys I'm taking from this place, where will be my target? This is my trend line liquidity. So guys, that's what I meant about trend line liquidity, and it happens every time in the market. So let's go to a lower time frame so we can look at the differences. Oh guys, look at this. This is a trend line liquidity. You can see the market moves with liquidity. This is a trend line liquidity. The market cleared this liquidity. Okay guys, look at this. The moment the market cleared this liquidity, The moment the market cleared this liquidity, it did what? It retraced back. It retraced back the moment market cleared this liquidity. So this is what I mean about trendline liquidity. So guys, do you understand that, or I should give you more example? Do you need more example? Guys, let me know if you need more example. Okay, this is another example. When this market was giving us highs, lows, lower high, lower low, lower high, lower low, then it break above, it was creating liquidity to this upside. You can see, if I wanted to take a buy from here to sweep my liquidity, this will actually be my target. Or this, let me adjust the liquidity, let me adjust my trend line very well. Look at this, this is actually be my target. So you can see market moves with liquidity. Okay, look at this now. This is another example in the same position. When the market was giving us highs, lows, highs, lower high, lower low, lower high, lower low, when the market break above, it did what? It swept this liquidity. So if I was taking a trade from here now, this will be my TP. So guys, do you understand that about trend line liquidity? It is very simple, and I need you guys to do this assignment. Go on your trading view, also learn about this thing. I can't teach you everything on this live. Guys, look at another one. When the market was creating highs, lows right here, when the market break below, it did what? It came here and swept the liquidity. So after sweeping this liquidity, it did what? It started buying. So market moves with liquidity. So market moves with liquidity, and if you can understand that, very easy. And about double top and double highs, let me give you an example. Most of the time we use trend line as our liquidity because it is very common to find. This is an example of a double high liquidity. Maybe the market is coming from here now. Where will we target? This will be our target. This is an example of a double high liquidity. This is an example of a double low liquidity. If the market is coming from here, this will be our target. This is an example of double low liquidity. So you can also go on charts. You can also go on chart, back test and forward test. Look for an example. Look for examples like this and learn from it. So guys, do you understand this about liquidity? And I will tell you guys how to identify a valid inducement. I will tell you guys how to identify a valid inducement. So I want to be sure you guys understand before I move on. And guys, tap on your screen. I want to be sure you guys understand. Talk more about, no problem. I'm still going to give you guys about an explanation about how to pick a proper inducement. I'm going to give you guys how to pick a proper inducement. Difference between liquidity. Shey this guy just dey join. This is the meaning of inducement, and this is the meaning of liquidity. I use liquidity as my take profit, while inducement is a trap, and it's the pullback after a valid market structure shift or a break of structure. So this is the meaning of inducement, and this is the meaning of liquidity. So guys, this is very easy. And guys, the strategy I'm using, liquidity based SMC, it's actually very easy. If you can know what you are doing in the market, it's actually very easy. So I want you guys to pay attention, go on your chart, back test, forward test, and learn from it. And I do talk more about directional bias. So if you guys can, some most traders do have problem with directional buyers. Most traders have problem with their directional buyers. But if you are on this live, say no more. All your problem is coming to an end. Okay, Paul. Yes, I'm still going to give you an example. I just want to be sure you guys understand this part of the difference between liquidity and inducement. Guys, as the rule says, a valid inducement, a valid in inducement should let me use must so it will be more commanding. Let me use must so it will be more commanding. A valid inducement must always be after a market structure shift or a break of structure, not before a market structure shift or a break of structure. A valid inducement must always be after. You know, the moment the candle, okay guys, this is an example. If you're having highs, lows, highs, lows, highs, lows, highs, the moment this candle closed below, this candle closed below, that is your market structure shift. The moment you identify this market structure shift, the next candle, just a single week, you can use a single week as your inducement. So I'm going to give you guys an explanation. I'm going to give you guys an example on chart because most people for here no go still understand. Guys, look at this example now. After this break of structure to the upside, you can see there is no wick here. So this actually gave us our inducement. You can see there is no even single wick here. You can see no single wick here. So this is a good example between the. Okay guys, let me give you another one. Another one. You can see this one with no single wick. Let me give you the one with wicks. Let me look for a clearer one. Guys, look at this break of structure. The moment this break of structure happened, look at the first reversal, which is this week, it might be multiple candle and it can be a single week. It can be multiple candles and it can be a single week. Look at this candle, look at this is my reversal and this is my entry from this breaker block right here. So guys, do you understand that? So look at this is a good example. The moment this candle closed above, look at the first reversal. How many time frame? Chill now. Why una dey make one after the other now? And now, please about the weeks or this guy sef I no understand. See guys, the moment this candle closed above this eye here, look for the first reversal. It might be a candle, it might be multiple candles, it might be a single wick, it might actually be a single wick. Look for that wick, the first reversal, the first pullback, which is your pullback or any pullback, anyhow you call it, just call it somehow. Look for your pullback, look for the wick or anything or the pullback. It might be a single candle, It might be a single candle or multiple candles. So look for it after that market structure shift or a break of structure. The moment that candle closed above, look for that wick or that multiple candles. Identify them as your inducement. Maybe. So guys, do you understand? Because I don't want to jump this step. So you guys need to understand this part. You guys need to understand this part. Okay guys, look at this example again. This is another example. The moment this candle closed below this low, look at the first pullback. Guys, if you can identify this for me, look at the pullback after that close. Look at the pullback. This is the pullback. Then where will be my entry, my breaker block? Because that's still a fresh zone for me. You can see this is very simple. This is actually very simple. The moment this candle closed below, look at the pullback. Then this pullback did not mitigate my breaker block. That was why this breaker block was valid. Had it been this pullback mitigated this breaker block and I have something like this, which is also a single week, my next entry will be from this my order block around somewhere here. I would have scaled down to the lower time frame and take my order block sell. So guys, that's it about this inducement. You need to backtest and learn, guys. And people will start asking me one dumb question now. They will look for maybe where you shouldn't trade. Don't trade. If you can't see something like this, leave the market. People will start asking me some question that you shouldn't have asked me. If you can't see something like this, leave the market. Look for another opportunity. Look for another chance. Look at this. It happened here. It happened here. So this is not a log. This is just normal thing in the market. People will start asking me now, okay boss, if it's something like this, where should I identify? Must you trade this break of structure? Must you trade it? Must you be in this market? Must you analyze this one? Can't you just leave it alone and look for your best chance? Please don't ask me any question about stuff like this. People will start asking me about this question now. In fact, I took the trade that day. Nice one. Oh, Rahman, this class was actually for beginners, but people wey just dey join, I know they will be left out. This class was actually for beginners. I started from the beginning, which is market structure. I started from beginning. And if you are still not a beginner, you need to know your directional bias. If you don't know your directional bias, you will still know it later. So it is actually for beginner. Learn, take notes. Learn, take notes. It is actually for a beginner. So which one is not for a beginner? Shey beginner wan put eye for pocket? Okay, beginner no sabi look for where candle close above and look. If beginner go on your chart, look for those pullbacks. Look for them. Backtest. Beginner no be for beginner ni. Teach inducement and liquidity na. Una go just dey join. Una go just talk say na. You still dey put na. Omo, go learn that one by yourself. Who you dey follow do na? I force you. Who you wan dey follow do na? Omo, I fit just end this life because una don dey reason me anyhow because of this thing wey I dey do. Una don dey reason me anyhow and I no get time. Shey na your money I wan chop? I ask you make you pay me any money. I don hear. That one don go. The guy dey tell me na. The guy still dey command me on top free course where I dey. You still dey command me. The way you dey do na for who? Na for who? Na kpai you there. You came late to the class. You still dey talk na. You came late to the class. This class begin 8:30 to 10:30. You came late. You come dey talk say teach inducement and liquidity na. Like say no be you come late. Everything was here. Everything was here. People wey dey here before don see this thing. You came late, you still dey put na. That one don go, that one don go. Okay guys, do you understand this thing about this inducement? People still dey ask me which pair be this, which pair be this. Guys, I'm still teaching inducement. It's, you can apply this to any pair. Una just like pair, which pair be this? Give me signal. Now wetin una like be that? Which pair be this? Shey that pair you wan chop am? You can actually put this in any, like any pair. You can put this in any pair. This is XAUSD. So what should I do next? Should I still, like, okay, let's look for another example. Let's look for another example. If you are new here, just follow and just stay, like, just try to meet up, because we started this class 8:30. We started, so if you are here, if you are just joining now, you are actually late. Guys, look at this one now. This is 45-minute time frame. If we scale down to the lower time frame, we'll be able to see it. Look at this. The moment this candle closed above, it turned what? A break of structure. Then where is my valid pullback? This is it. So the pullback mitigated this breaker block already. If you check lower time frame, everything will be clear. So that is why the market bought from this second breaker. And this is an example. Let me give you guys an example of this market structure. It is actually something like this. So this pullback mitigated this breaker block, this fresh breaker block. Guys, I'm still going to talk about point of interest. I don't want to rush anybody. That is why I'm not saying anything about breaker block and other block, how to pick a proper point of interest. Guys, so I don't want to rush anybody. I want it to be one after the other, so everybody can actually catch up with us. One after the other, one after the other. So everybody, if you have internal BOS, does it still count? Internal BOS, wetin be internal BOS again? Which one be internal BOS again? I dey teach break of structure, you talk say internal break of structure, internal, external. If you like, go 5 minutes, 3 minutes, dey look for internal and external. I know now, shey this one no be 45 minutes. This one, okay, why you sef wan go 3 minutes, go dey look for? Don't you know that there is a lot of manipulation in 3 minutes? I only use 3 minutes or 5 minutes, maybe when the market is extremely, like, volatile, maybe during the news, maybe I saw my maybe I'm active during the news. I can actually scale down to 3 minutes, 5 minutes. Internal, external, go dey look for am now. Shebi you go blow accounts back to back. People will ask, what do you want to do in 3 minute time frame when the market is not volatile? You be scalper. You be scalper. And now, I swear, na too much of YouTube now. Too much of YouTube. You leave internal and external, no dey let this thing dey disturb you. See guys, there was a time I had problem. See guys, when I was facing this forex journey, because of too much YouTube, it actually affected me. I knew about that was why I knew about fair value gap, SMC, SMR, because I actually read everything. So I dey confused. I was lost for more than 4 months, because the knowledge too much. If I don't see this one now, I don't see fair value gap. If I don't see this one, I don't see support zone. I dey wait for pullback, support, break and retest, trend line break, and everything dey head. If I don't see one pattern now, I don't see another chart pattern, flag pattern, head and shoulder pattern, kinikon pattern. If this thing sef too much, wallahi people go dey do mistake. Una go dey do, make una reduce this thing. If e too much, just reduce am. Try to focus more on on one strategy. Try to focus more. Person now, if he asks some people to actually analyze trade for you, only them go mark out fair value gap, order block, breaker block, support, resistance, break and retest, XMR, first candle, Asian liquidity, Asian low, Asian high. Why now? Why you dey mark everything? People go dey mark Asian high, Asian low, Asian liquidity, Asian trap, New York trap, London trap, kilo day. Only you wan trade everything. Na why some people no dey profitable. Only them, like knowledge too much. If your knowledge too much, e go affect you. That's just the fact. If your knowledge too much, e go affect you. I know say people actually dey this comment wey be say they go mark everything, every single. If you see their charts like this, okay guys, look at this BTC. Look at this. Look at how simple it is. You see Asian high, Asian low. Wetin concern me? Asian, if Asian like make it, nothing concern me with Asian high, Asian low, New York high. Wetin concern me? Look for my entry, look for my valid point of interest, my inducement, enter market. All this Asian high, Asian low no concern me. If the market wan manipulate, that means the market wan manipulate, make it do anything. If I hit stop loss, normal. If you guys were here, I took this sell from here too on Saturday. I took this sell from here. I took this buy from here. You can see just one trade, 2 winning trade. Okay, this was around 1:6. This was around 1:8. If I won't lose this trade now, so it will take me about 14 trades to lose. If I'm just risking $100, it will take me about 14 trades. And you know they're possible because I know they trade everything. I know they trade in Asia, London, Kiniko. Anytime I see my setup, I'm going to take my setup. Anytime I see my clear analysis, that's what I follow. That's my rules. 8:30 to 10:30. So guys, always know. Make una leave all this. Please, if you dey use Asian high, if that's your strategy, use that one. Then leave the remaining one. If you dey use New York high, if that's your strategy, use that one, leave the remaining ones. No dey pack everything. Some people now, if you check their chart, you see technical drawing, I be wetin dem dey call am tools. Indicator wey dey there, e go enter 68. Indicator wey dey some people chart go enter. Na only them go use moving average. Na only them go use Asian high and Asian low. Na only them go use section break. Na only them go use strength index. Everything dey there. Na them go dey find, like some people sabi use indicator. I don't see one guy. He get like 16 indicator for screen. I was like, what the fuck, man? Some people they try. So guys, if you want to become profitable, you need to like just get over all this stuff. Leave them. Focus on one strategy. If you are using break and retest, focus on that break and retest. If you are using maybe double low as your buy or sell, if that's your confirmation, focus on it. Leave the remaining ones. Let them be. So guys, that's actually how to trade. Except from being profitable or analyzing anything, learn to face your only strategy. Leave them. If you see person where they collect money with Asian high, leave them. Make it they collect the money with Asian high. No, nothing concern you with Asian high. So guys, am I making sense? Say una dey understand me like this. Yes, do more of practice. Don't worry, I'm still going to explain about this break of structure. Do more of practice and face your strategy. Like, look for your edge in this strategy. See guys, there's a lot of people using this strategy, same as I. Some people even refine their own out. That is how good people are. You should leave all these things you are seeing online. Some people are profitable with only maybe, okay, from Asian high, I'm going to sell. Some people are profitable. Some people are profitable with only Trendline. Some people are profitable with only resistance. Some people are profitable with only support. So just face the one you know. You can't get all the move. Some people now know they calm down. If you check some people chart today, some people still take like 3 trade. As he don't buy go hit stop loss, he go sell, he go hit stop loss, he go come put am for middle, oh yeah, buy and sell at the same time, he go still hit stop loss. Why? I know say some people dey here wey don actually buy and sell today, they go put am here. See guys, if this is the limit order, they go put buy, they go put sell. I do am very well now, una no fit tell me. Na wetin I do, so una no fit tell me this thing. Guys, na wetin I do. So all this thing na back days. If you never so na wetin I don do now. I buy and sell. I don buy prop firm, wey be say if I don see my setup, I go buy from one account, I go sell from one account. Two prop firms. And now, so all this thing no be new thing, ah guys, there was a time when I was trading news, there was a time I go open two accounts for SNES. If news dey come out in maybe 30 minutes, I fit just deposit $100. I go use one sell, I go use one buy. Like 3 times this market hold my neck. The two of them, like buy and sell, e go hit stop loss. Because you know the long week, vim, everything, everywhere go first semo, everywhere don burst. So leave all this gambling, face your real strategy. Na wetin me sef don do. As I see say life no dey there, I change. I leave am, I turn back. See, we don use. See guys, if I tell you wetin I don face for this forex thing, Samad, nice one. You know how many times everywhere don blow. Guys, and if you don't make profit, learn to leave the. See, some people like this, if they don't make profit now, they don't become. You go see person, if you deposit $20 now, you don't carry that $20 go $100. For a high, he don't turn boss. In next trade like this, he go risk $80. Now some people problem be that in next trade na $80 he go risk. Why? Because he no dey consistent with him risk. In next trade na why can't you be consistent with your risk? If you don't make $80, you think say you don't turn boss. They play. Some people no even get any plan. If you get $500, okay, you want to use this $500 trade for a month. If you ask some guys now, they go tell you say wetin you wan do? Make I first deposit am for my SNES account. Na their first plan be that. Why your first plan go be first deposit all your capital in one account? Why you want deposit all your capital? So if you want over trade now, it go dey easy for you to go MT5. And I know some guys dey here, I go dey review una secret. When this market dey go up like this, as e no reach here, they will be like, let me scalp. Now wetin I don do very well from this resistance, I go don tap sell. I go be like, make this market just come small, make I run close am. End of the day. So now wetin I don do. So all these things na wetin I don do very well. I see guys. So guys, let's continue this class, Jare. So make we leave all these things. Now wetin person don do. And as I see say life no dey there, say this thing won't actually scatter my life. I get sense by force by fire. Now gold sweet for that kind thing. They play gold sweet. They continue now. One day you go deposit your money and you go cry. You go cry. Guys, so let's continue the class. So guys, this orientation wey I don give una about this risk, I don cast a lot of people this night. Some people go still wake up tomorrow, still do the same thing. You go still cry, I promise you. So I don give una orientation about risk management. If you like, no carry am. Na your problem, na your palaba, no concern. No be my money you dey take trade. You dey talk like shey ngbobo boy. Una see as they don see this thing now, they don dey shout you enter this gold. If you like enter, na your pocket money. Nothing I no enter any gold and I no dey give signal. So they don dey shout you enter this gold, you enter this gold. Enter, follow me enter pit o. Follow me enter pit. So guys, let's continue. This is the meaning of inducement. Well, this is the difference between inducement and liquidity. So stop getting yourself confused. This is the difference between inducement and liquidity. I use liquidity as my take profit, and inducement is just a trap. I expect the inducement to be cleared. I expect my inducement to be cleared before my actual buy or sell. So guys, that is it about inducement. An assignment for you guys: go on your chart. Go on your chart. Like try, like when you are free, go on your chart, look at the chart, back test, forward test, just scroll, just keep doing something like this, keep doing something like this, then look at it, like pay attention to how the market moves. And guys, stop trading up to 16 pairs. Leave 16 pairs. You know, if you analyze all of them, see as this place clean, see as e clean. Okay, see as e clean now, wetin you see? You see say the chart clean sef, no moving average, nothing. If e dey work for you, fine, leave it. You see as my chart clean, you see as everywhere clean, leave everything. Okay guys, look at when I did this directional buyers on Saturday. After my directional buyers, when I told you guys about this directional buyers, see, the chart was actually clean because I knew this is my only key level. If I can't find my market structure shift here, I will continue the buy to the upside. So to clear this trend line liquidity. So guys, look at how my chart is very clean. If I want chop stop loss, I go chop am very fast. If I want chop take profit, I go still chop am. So guys, look at how clean it is. Please show it on chart before take. No problem. What is show it on chart? Should backtesting be replay candle or normal? It might be replay candle and it might be maybe normal scrolling back. And guys, this thing, if you guys, maybe they give guys, let's think about this thing. Maybe when you are in school, maybe secondary school or something, if they give you assignment, and you did your assignment every time, maybe you just, and when you are in class, you still check your notes, you will tend to remember anyone you fail. Maybe you still go back home and check, okay, how did I fail this thing? You will tend to remember and you won't be able to make the same mistake. If you even make that the same mistake again, next time you won't be able to make the same mistake again. The more you check, the more you look, okay, if you chop stop loss now, go back to the chart. Okay, how do I chop stop loss? Wetin I do today? Okay, is this market manipulation? What did I do wrong? What was actually wrong? What should I do next? That is what you should ask yourself. Stop waiting for people, okay, make this person give me signal or anything. Stop waiting for, okay, make Timmy come online, he go still come tell us, shebi Timmy go still teach me. No, always go on your chart, look for, like, stay on your chart. And guys, if you want to become a profitable trader, forex is not a thing you can just analyze your chart now and wait till night. Maybe you chop loss, abi you chop take profit. Stay with your phone or iPad or system, check the market maybe every 30 minutes, 2 hours, 4 hours. Check your system, check it, look at the market maybe every 30 minutes, 1 hour. Before me sef, I go just analyze trade like this, leave am go sleep, think say shebi forex dey easy, make money just print out. Na lie, e no dey work like that. They no go tell you all this one, but always check your chart, in case there is reversal. Like this BTC, nobody dey expect make this BTC buy. This is just a 15-minute breaker block. If you go check am, this is a 15-minute breaker block. As I don see am, I don confirm, okay, this one na my market structure shift, make I up on the buy o. And I did what? I target my nearest liquidity. Wetin he do? He clear am for me, and everywhere sweet. Oh, don't worry, I'm going to post the video on my Telegram channel. I trade liquidity based SMC. Guys, before you find your directional bias, always use your 4 hour or daily. You look for your directional bias in the higher time frame. Guys, let me give you an example of this weekly. See, before this gold started buying, okay, I think it is daily. Yeah, it's daily. Guys, before this like this bullish move on gold, guys, okay, look at it. If you can look for your directional bias, look at this reaction from this order block. See, and this is 16th of May. 16th of May. It took gold how many days? Let's look at this together. To clear this high, it took gold maybe from 15th of May to September. So guys, you should do calculation. It took gold maybe about 4-5 months before it cleared this high. So if you can do your directional bias, you would have no gold has been bullish. You would have no gold has been bullish. So when the market even get here, somewhere here, maybe when you can see something like this, you should have know, okay, what is the next move? Because you know your directional bias already, it will be very easy for you to know what the market is saying. Same here now. Because I know my directional bias, it is very easy for me to know, okay, overall trend is for gold is bullish, but me as a day trader, I just need few pips. What should I do? Up on the current market trend. And what is current market trend for gold? Only if I say, okay, maybe the market is unable to keep selling or reversing stuff, I can jump on the normal trend. So always learn to identify your directional bias. USD JPY, where we analyze together on Sunday, look at it. Today is Tuesday. You can actually take this. Maybe you took this trade now, you would have hit TP by now. Today, if you take 2 setup from this trade now, is it not okay without any like stop loss or any loss? So that is just it. If you know your directional bias, everything will be very easy for you. Use your 4 hour and daily for your directional bias. So guys, tap on your screen. Guys, if you are new here, you are welcome. Follow me if you are new here. Join my Telegram channel. I'll start posting on my YouTube channel. Alpha Tony. I'll start posting. Fab, you don't dey the right hands. You see, this is another problem. Ayomi, see wetin Ayomi ask me, bros, are you not using ETH USD to check maybe BTC is going to buy or sell? Why I wan use ETH USD check maybe BTC is going to buy or sell? This one na another problem. Ayomi, as you don talk this thing, I don deliver you in the name of Jesus. Carry deliverance. Yeah, so make I run deliver am. Why I go use ETH? So see, actually some people said USD JPY and GBP JPY e dey sink. When this market dey actually sell, GBP JPY dey buy. Wetin dey sink e call. Oh, which buy trade is that? And guys, check this my Telegram PDF. I posted one PDF on my Telegram channel. So guys, check it. So I posted candlestick Bible on my Telegram channel. Ayomi, I don't trade DXY. I don't deliver you from these evil spirits. Leave them alone. Leave them. Focus on what you trade. Leave all these things alone. Una dey find easy way to make money. Ayomi, I don't deliver you already, but you still dey go back. You no wan carry this deliverance. Guys, if you are new here, follow me, follow me, follow. Now big evil spirits. Check my Telegram page. Check my own. Check my TikTok bio. My Telegram channel is on there. Check my TikTok bio. Check my TikTok bio. Oh, please, one after the other. I don't want to talk about valid point of interest tonight, so I won't confuse people. You know we have new traders here, so one after the other. Omo, e pay me. Jojo of Africa no dey here this night. Jojo of Africa actually missed this class. Tyson, you no get long way. If you can know what you are doing, you don't have any long way, I swear. If you can first deal with your psychology, your risk management, your money management and all, then the next thing is your structure. The next thing is your structure. Guys, the way I analyzed omo una don for. This is my own target. I don't know about this, but this is my trend line target. Dinero. The way I analyzed higher time frame, that is the way I do my entry. If you notice the way I analyzed, but when I want to enter the market, I don't use trend line, anything. I don't use resistance. I only use for my market structure shift, my inducement and POI. For example, look at this entry here. Look at this entry. This is a break of structure to the upside, and before this break of structure, look at this market structure shift, because it was coming down. So do you understand? This was actually a bearish market. Then when it touched this POI, so do you understand? Very simple. As I dey show una sef, because I don explain this one. I don explain point of interest. I don explain market structure shift. So market structure. So una, as I dey show una like this, una suppose just dey understand without saying anything. I don't use any confirmation. Guys, that is the question. I don't use any confirmation. If I can find my own valid market structure, either my break of structure or MSS, and my inducement and my POI, breaker block or order block, I enter the market. Okay guys, let's go again on liquidity. If you are new here, follow me. I don't even tire to dey talk say if you are new here, follow me. If you like, no follow me. If you join my next class and I know say you no dey follow me, na straight to blocking. I know the best. I just don't tire. People go join this class late and they go ask me, say, take again, recap. After this recap now, some people never dey here. They go still talk, say, recap. Guys, this is inducement and liquidity. This is about today class. This is about today class entirely. We have our liquidity and inducement. What do I call my inducement? Inducement is a trap, and it is a pullback after market structure shift or break of structure. What do I call my liquidity? Liquidity is what I use as my take profit. I use either trend line liquidity, double top liquidity, double low liquidity, long wick liquidity. So before you identify a valid inducement, it must always be after a market structure shift or break of structure. For example, before you identify a valid inducement, it must always be a market structure shift or break of structure. Now let's go on the chart. Look at when this market was creating highs, lows, highs, lows, highs, lows. Then the market got here. Then break this high, this high, this high, and this high with one single candle. Okay, after this break now, after the market closed above this high, what do I look for next? I look for my inducement. And where is my inducement? If you can look at this, after this break, this is the candle. It might be one single candle or series of candle. At this place now, you can see we actually have two candles here. So I marked out as my point of as my inducement. Then where is my point of interest? This my breaker block is my point of interest. My breaker block is my point of interest. And why am I choosing this breaker block? Because when this market closed above, this inducement didn't mitigate my breaker block. Imagine this was my pullback. Guys, imagine this was my pullback. I would have used the second point of interest, which is this breaker block right here. I would have used this one for my buy. If this first breaker block was mitigated, I would have used this second breaker block to buy the market. So that is it. Let me go again with another example. Guys, let me go again with another example. So stay active. After this guys, look at this. After this candle, look at this wick now. After it closed below this low, look at this pullback, and it is just one candle. You can see I marked one candle out as my inducement. Had it been this pullback now, this one candle I marked out now, the wick was from here. I wouldn't have taken this trade from here. It would have been from my other block. Had it been this wick now mitigate this breaker block, then my entry would have been from my other block. So that is it about inducement, and it is very simple. Let me look for another example. And this stuff happened repeatedly. Guys, look at this now. Look at this example again. When the market closed above this high, look at my pullback. My pullback mitigate this my let's go to the 15 minutes so we can see the chart very well, because there was another breaker block at that point. See, when the market was giving highs, lows, highs, lows, highs, lows, highs, lows, then this candle break above. So what is my point of interest now? Look at my liquidity here. This is my liquidity, because after this break, this is my valid pullback. After this candle closed below, above, when the candle closed above, this is my valid pullback. Then what is my next point of interest? The breaker. You can see this is it. This is the second breaker here. So guys, do you understand? Guys, do you understand? And this is how I mark my other block candle. Guys, if you have something like this, and we have this engulfing candle here, guys, if you have something like this, if my wick is longer than my body, if the wick of this other block is longer than the body, maybe our wick is like this. If I want to mark this other block now, I'm going to mark this other block from the body. I'm going to mark the other block from the body. This is another example. Guys, look at this second example. Pay attention to this second example. If the wick of my other block is short, I'm going to mark the other block from the wick. from the week. Okay guys, let me give you an example of inducement with this. If now the market have broken the structure, then if this is our pullback, if this is our pullback here, this place is still valid to pick our point of interest. This other block is still valid to pick our point of interest, but this is another stuff. Guys, if you have something like this, and if this is our pullback and the pullback mitigated this on week, it is not valid. It is not valid because this week is actually shorter than the body. It is not valid. It is not valid. It is not valid. So this is actually valid. If this is our inducement, it is still valid. But if this inducement mitigated this body, then this all other block is not valid anymore. And this is how to choose your stop loss. This is how you put your stop loss. Guys, look at this. This is how you put your stop loss. Just put few pips below. Put few pips below. Guys, you understand? Put few pips below because of maybe market spread or manipulation. Guys, so do you understand? Okay, let's look for an example. Guys, look at this example. Look at this order block right here. You can see why this order block is valid. You can see the wick is actually longer than the whole body. Then after this pullback now, then continuation, you can see I still use this. You look at how I placed my stop loss. Look at how I placed my stop loss. I put it below this wick at the bottom. But look at where the candle actually, okay guys, see. Look at how I choose my TP will be in the up at the point of view. Guys, when I too like time frame, it is not about time frame. Just understand what I'm talking about. Guys, see when I don't understand. So that is all about inducement, how to pick a proper inducement. So I've taught you guys how to pick a proper inducement. So who has any question? Who has any question? I'm going to post video. If you don't understand or you are just joining, join my Telegram community. I'm going to post the video because I actually screen recorded. I'm going to post the video. I'm going to post the video. If you are late here, I'm going to post the video on my Telegram. Any recap can help. I'm going to post the video on my Telegram. If you are new here, join my Telegram. I'm going to post the video. I don't recap. Like una they come this class late. Now why? The class starts at 8:30 p.m. to 10:30 p.m. 8:30 p.m. to 10:30 p.m. My Telegram channel is on my bio, and this is my Telegram channel. Let me give you guys here. This is my Telegram channel. This is my Telegram channel. This is my Telegram channel, Timmy FX. I have 280 subscribers. And now, read one. You get money now. Yes, you guys are going to watch the screen record. Factors to consider when choosing a valid break of structure. I'm going to talk about point of interest another day. That is about point of interest, but today one is about inducement. You can join my Telegram community. So that is it. If you are new here, follow me. We do this Monday to Friday, 8:30 to 10:30. It's actually a free class, and you are going to learn everything you need to know. You are going to learn a lot from this class. No be cho cho cho. we dey show workings and we dey deliver for